Bitcoin just crashed 33% in this last month. MSTR is down like 60% in the last 3 months. Everyone's panicking. They're like, oh, the 4-year cycle's over. We hit the peak. There's a 2-year bear market coming up now. But what if I told you this isn't a bear market at all? What if this is a coordinated attack by one of the biggest financial institutes that you know? And what if those people are actually terrified that they're about to lose control of the monetary system? I'm about to show you the financial war that's happening right now in real time. And by the end of this video, you'll realize why this might be the buying opportunity of a lifetime. Let's get into it. All right, so let's just start with basically the most damning evidence. I found this video by Emprey Digital, and it's basically exposing exactly what JP Morgan is doing to MicroStrategy. Here we go.
First, they get short the stock, right? We know that happened because they didn't have the stock to deliver out to customers. So they're short the stock, they're motivated to have it go down, right? Second leg of that stool is now they increase the margin requirement from 50% to 95%, okay? And there's no risk model where that makes sense. The underlying asset is stable, they have no risks of default on their debt, they have minor leverage, right? So they don't need to sell Bitcoin, right? So then that third leg of the stool yesterday, they put a note out, basically a short note on the stock, a stock they don't even cover, basically saying it's going to be removed from the MSCI index and the NASDAQ 100 index, right? Basically kicking the baby when it's down. So all motivated, coordinated attacks, sequential attacks, right? Makes perfect sense. It feels to me like their business, they think their business is threatened by MSTR, their business is threatened by the DeFi network, right? By the Bitcoin network, and you want to break the confidence in the asset. That's how you would do it.
So as this guy said, there's 3 steps to this attack. 1, JP Morgan shorts the stock, right? The MSTR stock. Then they raise the margin requirements from 50% to 95%, which is kind of crazy from a risk perspective. You would never do that. Finally, they released this hit piece about MSTR being excluded from all the NASDAQ indexes. So as this guy said, this kind of just feels like a coordinated attack on MicroStrategy and essentially on Bitcoin, designed to break the confidence in the asset. Here's what's really crazy about this. When there's been reports of clients trying to withdraw their MSTR shares and JP Morgan delays it or is it unable to do it, that's not normal market behavior. That's what happens when someone doesn't actually have the shares to deliver. All right, now most people are going to look at this and be like, all right, JP Morgan, they're a big bank. They don't want, whatever. They don't like MSTR for some reason. But it goes a lot deeper than that. Let's get into it. I actually found this other tweet. It talks about basically Operation Chokepoint 3.0. So it's saying a major index provider is quietly trying to label Bitcoin-heavy companies as ineligible, even though every other commodity-linked industry is fully approved. No oil producers, no gold company, no uranium miners treated this way. Only Bitcoin. Okay, think about that for a second. Oil companies that literally destroy the environment, they're approved. Gold mining companies, approved. But companies that hold Bitcoin, they're suddenly ineligible. And here's the key insight here. Liquidity indices are the pipelines that trillions of dollars flow through. If you're in, capital flows to you automatically. If you're out, the door's shut. Okay, so this isn't just about MSTR. This is about cutting off Bitcoin companies from the entire institutional investment pipeline. As he says, all without passing a single law. And that is called Chokepoint. If you think about your 401k, a lot of people, they have these investments that flow into investments that they might not even know. They're just mutual funds, and they invest into these investments monthly or bi-weekly, however your 401k is set up. And there's a lot of pensions set up this way and everything, where these investments just get passive flows into them. Now, these passive flows really create most of the inflow of money. So if you stop this from happening, that's Chokepoint 3.0. You stop all these flows from happening and you just remove any sort of Bitcoin companies. Michael isn't just sitting there taking this beating. Look at his response. So he's basically saying, we're not some passive fund you can push around. We're building something new, a Bitcoin-backed structured finance company with $500 million in revenue and over like $7.7 billion in digital credit securities. So notice how he emphasizes they're an operating company with the ability to innovate capital markets and software. So he's positioning MSTR as something that financial world has basically never seen before. Then he drops this line, right? No passive vehicle or holding company could do what we're doing. This isn't a fund, okay? And he's a company, he's just doing it his own way. And this is unique to his company. No one's ever done anything like this. Okay, so now we understand what he's really fighting against, not just market forces, but a coordinated effort to choke Bitcoin companies from institutional flows. But it doesn't end there. So I started digging a bit deeper, and I found this incredible article from Maryland Howell that connects basically all these dots. And what he's revealing is kind of crazy. We're witnessing a war between two competing monetary systems. So there's the old guard, which is JP Morgan, the Federal Reserve, and Wall Street banks, who have controlled the dollar creation for hundreds of years. And the new order, which is the US Treasury with Scott Bessent, stablecoins, and Bitcoin, who are trying to take the power back. So here's what most people don't understand. JP Morgan isn't just a bank. They're basically the enforcement arm of the old monetary system. They sit right next to the Federal Reserve and control how money flows in and out of the system. So when Trump starts calling JP Morgan out specifically, he's not just attacking a bank, he's attacking the whole system. And MicroStrategy, Marilyn Howell explains that MicroStrategy has become basically a bridge between Bitcoin and the old system. It's kind of just like the conversion bridge, as he calls it. So think about it. Big institutions, they can't just buy Bitcoin. They need to buy MSTR or other Bitcoin companies to get exposure to this asset. It's the perfect on-ramp for traditional finance onto the new system. And JP Morgan sees that as a threat. So we've seen this before. They've used this playbook before to suppress gold in the past. And you can argue it was suppressed for the longest time until probably this year. Artificial shorting, derivative pressure. But now we see it's even bigger than that. It's Chokepoint 3.0. They're trying to cut off all institutional capital flows into Bitcoin. And now comes Trump's master plan, right? So Trump's team is playing a much deeper game. They're letting JP Morgan crash the Bitcoin price to whatever low prices that they can and actually accumulate Bitcoin at the bottom prices for the US. So what's the ultimate plan? You move monetary power from the Federal Reserve to the US Treasury, use Bitcoin as America's strategic reserve, launch government-backed digital dollars that compete directly with the banking system. And one thing that's even possible is the government can buy out MicroStrategy straight out, just like they did in Oracle, right? They bought Oracle. I think they bought 30% share in Oracle because of the AI chips. They can do something very similar with MicroStrategy so they can get the Bitcoin exposure that they need. Imagine if the US Treasury became MicroStrategy's, I keep calling it MicroStrategy, but Strategy's biggest shareholder. That will literally be the ultimate signal that America is backing the new monetary system. Here's the catch. Trump needs the Federal Reserve on his side. He needs control of the Federal Reserve to make this work. And if he loses Congress in the midterms, this plan could collapse and go to zero. And that's why timing of this is kind of crucial. I think what's happening is JP Morgan is going to suppress the price. Trump tries to buy Bitcoin Treasury Reserve, strategic Bitcoin reserve at these prices, and they don't announce it. Why would they announce it before accumulating, right? Because if they accumulate or if they announce before accumulating, the price would literally shoot to the moon and they would take an L. So I think they're going to accumulate and not announce it until they have a big enough bag to actually announce it, and the price will go higher. And MicroStrategy might be a key part of that. But again, JP Morgan's fighting that because the old system with them needs to stay. They're in control of it. It's just a power control thing. Here's another interesting analysis by Michael Howell. He's basically the leader in liquidity analysis. He's just all over it. How much liquidity is actually being inserted into the market and how that's driving the cycle, the debt and liquidity cycle.
Let's take a look at this chart. Here again is debt held by the public. And let's just assume that the debt is held constant in gold terms. So in other words, the gold price keeps pace with the increase in debt. Okay. In other words, the debt stock is constant in gold dollars, put it that way. Now, what that shows is the implication for the gold price. And that's saying that, now the gold price is, wherever we are, $4,000, which you can see. By the mid 2030s, that gets up towards about $10,000. And by the mid 2050s, it'll be, easily testing 25,000. And that's the effect of debt on the price of gold. Now, if people say, well, that's fanciful, let me just take you back for the last 25 years. In the last 25 years, from year 2000 to year 2025, the stock of federal debt increased by about 10 times, tenfold increase in federal debt, right? Hold that thought. The S&P went up by less than fivefold over that time, but everyone feels pretty comfortable with that, thinking that was a great return. But actually, its scale relative to debt, it's been poor. The gold price has gone up 12 times. Bitcoin's clearly gone up a lot more. So if you think that gold is going to go up, then I think Bitcoin's going to go up with it, because these are monetary inflation hedges. And the ratio between gold and Bitcoin has been, on average, about 27 times or something. So if you multiply the gold price by 27, you get the Bitcoin price. So that's more or less what I would be saying. In the long term, you absolutely need these monetary inflation hedges. You've got to have them in portfolios. And, people have thought about gold in the last 25 years and scratched their head and said, well, okay, it's volatile, we don't want to own it. But in the backdrop, it keeps going up and it keeps making people money. And this is why we need to avoid monetary inflation, whereas the politicians, that's their only course. They've just got to inflate away the debt, and all they can do is print money.
So Michael Howell here, he just dropped a bombshell. He's saying Bitcoin cycles aren't about halvings, right? I think, which I covered last video. And they're more about the fight between debt and liquidity. So this chart, right, when you have high debt relative to liquidity, you get the financial crisis like 2008. And when you have, or like the European banking crisis, and when you have abundant liquidity, you get these asset bubbles like 2000 and what he calls the everything bubble that we just lived through, right? But here's the key insight. We just came through the most extreme liquidity period in history, and every crisis since like '08, policymakers just threw money at the system, more money at the system, and now liquidity is finally being drained, and it's hitting, guess what it's hitting first, right? Bitcoin, which is the most liquidity sensitive asset, and obviously MSTR, which is essentially leveraged, 2x levered Bitcoin. So this perfectly explains why we're seeing the price actions that we are. There's Operation Chokepoint 3.0 going on, and then there's also the debt liquidity cycles. Here's another tweet from Bitcoin Archive. So this kind of gives me some hope that we're actually near the bottom. I think we hit 80K here, but these RSI levels, they're just technical indicators which say how oversold an asset is. And every single time, the last two times we were this oversold was the 2019 bear market, and then as well as 2022 bear market, which was FTX and basically pre-COVID or COVID. That gives me hope that we're maybe near the bottom here. Look at this one. This fear and greed index is actually one of the most basic indicators. So last time we were this fearful, extreme fear, was FTX collapse. In 2022, we were at 20 grand. And now we're lower than that, which is, so people are even more fearful, even though we're at 82,000. As Warren Buffett says, right? We buy when there's blood on the streets. Everyone's scared. They're running. They think price is going to go to 20K again or something crazy like that. I don't think that's going to happen. And if it does, I'm buying. Even now, I'm buying. So Warren Buffett always said, be greedy when others are fearful. And I've never seen more fear like this. All right, let's put this all together, okay? We have Bitcoin at oversold levels that we haven't seen since major bear market bottom levels. We have the fear and greed index, extreme fear, coordinated attacks on the main bridge between Bitcoin and the old financial system, Chokepoint 3.0, trying to cut off institutional capital flows. This is right, and we're not in a bear market. It could be artificially suppressed by a dying system trying to stay in control. And here's a quote from Gandhi. First they ignore you, then they laugh at you, and then they fight. And I believe we're in this section here. Then they fight you, and then you win. Look, all this could be wrong. Markets could go lower, but the evidence I'm seeing, I just don't see that. And I've linked Maryland Hoddle's article down below, the full analysis. It's actually a great piece. You guys should go check it out if you want to learn more. But yeah, let me know what you guys think. What do you think? Was it all just BS? Is it just normal for Bitcoin? They just dropped 30%? Or you think something's going on in the background? You think JP Morgan's trying to take over the world? Or am I just connecting the dots that don't even exist? Let me know in the comments. And if you want to stay ahead of the story, click subscribe, put the notification bell on so you get the notifications when I post the videos. And I'll see you guys on the next one. Peace.